This episode of Profiles in Risk is sponsored by Zywave. Insurers, brokers, and agencies are facing escalating risk and rising complexity. Only Zywave delivers a performance multiplier, equipping you with the tools to get risk right, unlock efficiency, and scale at new speeds. Find out more at 𝗧𝗵𝗶𝘀.com.
Hello and welcome to Profiles in Risk. We're your host, Tony Canis. Today I have with me Charles Johnson, Head of Product Growth at Insuraviews. How's it going today?
It's going wonderful, Tony. Thanks for having me on.
My pleasure, my pleasure. I've seen you guys at a lot of conferences this year, so I am very happy to finally get you on the show. So according to LinkedIn, you are in Wisconsin.
Yeah, I just moved to Madison a few months ago from Milwaukee.
All right. So as you moved a little bit further north, right? Am I getting that correct?
Basically straight west.
Okay, west. Okay.
Yeah.
So we're recording October 27. So I'm assuming it's like the very tail end of decent weather there.
Yeah, it's like 57 degrees outside and sunny. It feels pretty nice. You know, in
Okay.
Milwaukee, if you live within a mile of the lake, you get like this nice insular lake effect, so it stays nice a couple extra weeks. But no, we're at the very end. Last year it snowed on Halloween, which was like, we're 4 days away from that. So it's ready. It'll be here any moment.
Good luck with that.
Yeah. How about you, Tony? Where are you at and where's the weather where you're at?
Atlanta, Georgia, and we are getting rain from the hurricane going by the East Coast. So not too bad, just kind of like gross and cloudy.
Yeah.
But generally, 9 out of 10 times we don't get affected by snow. So exactly why we live here.
Do you have a nice climate resilient place that you're staying?
Ninth story and on a very new building,
Okay.
apartment. So yeah,
Okay.
I'd say so.
It is an insurance podcast. We got to mention climate resilience at least one time.
I'd say so. It's a very new building, like 2 or 3 years old. So we always give the guests the chance to get the elevator pitch. So what
Okay.
is Insuraviews?
Yeah, so we're a company that takes all of the rate filings, which if you don't know what a rate filing is, insurance companies have to file these documents in every single state for most of their product lines, anything kind of sold to the general public or maybe small or medium-sized commercial clients. And these documents contain massive amounts of information about how policies are rated, the forms that they use, exclusions, endorsements. And so our company takes all of these documents. We have a robust ingestion process. We create structured data from it, and then we layer on analytics and generative AI to solve key problems like what is my competitors doing? Okay, what pricing factors or things should I include that my competitors are using? What multiples, am I using and how do they compare? What are my loss costs and how does it compare to others in the industry? And then even the filing. So I'm filing a product. How long is it gonna take me in a given state? What are the behaviors and tendencies of a specific reviewer? Who are other people who have dealt with these objections? So there's kind of all the way from the competitive research to the filing and approval, there's support for the whole product life cycle.
Okay. So I've never been on the product side, but I've chatted with product people and I've recruited for product and for filing people.
Yeah.
There's a particular what's it called, platform that the states use or that most of the states use.
Yeah.
Right.
Yeah.
That is
Called
kind of
SURF.
infamous. SURF. Okay, so that is kind of
Yeah.
infamous for not
SERFF.
being the friendliest
Yes.
thing in the world. Okay.
No,
So
very hard to find things using that.
okay, perfect. So my understanding of what the product people do is basically all you described, except historically it's kind of like Excel and Surf, right?
Yeah. Maybe it should some helpful background, Tony, as I am
Yeah. So
actually
what did it look like before Insuraviews?
I'm an actuary by trade.
Mhm.
So I've been in the weeds of, pricing and designing products. Back to your question of like who does it, it kind of varies from company to company, right? Like big companies, they'll have dedicated competitive intelligence teams that are 20 or 30 people deep. They'll have dedicated product managers for each individual product line or region. Or, I was even talking to a company that every single state had its own product manager. Then you'll have pricing actuaries that really just deal with the pricing and objection response. Then you'll have compliance or state filing people who are in charge of dealing with the regulators and putting documents together. As you get smaller and smaller, those roles become more condensed until, you're talking to small mutual companies that maybe have one or two actuaries on staff and one or two support folks that do everything from competitive research to product design to pricing to implementation. So it kind of varies from company to company who uses it. And before Insuraviews, there are some other platforms that help aggregate the PDFs. I mean, these PDFs are huge. Some of them are hundreds of pages long. So like, they had like a mediocre search and they had like two or three key pieces of information. But we extract way more information than that. And the way that we identify and extract information allows us to synthesize really well. If you go look in the marketplace, and it's not really just rate filing specific, but just broadly, this AI first product. You and I just met at ITC in Vegas, and one of the things they talk about there is like all of these vendors, right? 80% of the people who showed up are vendors, not investors or carriers. And what percentage do you think had AI in the name, Tony?
That, just about everybody.
Yeah, everyone.
Yeah.
Uh, but what I see the challenges with a lot of these technology folks coming into the insurance space is they have like AI chatbots. Like that's an AI chatbot is going to be answer all of your questions, everything you need to do. And the challenge with this is that in insurance, particularly, regardless of use case, there tends to be way more information than a typical LLM's context window, right? So have you used Microsoft Copilot? That's kind of the carrier standard, right? Like we
Hmm.
use Microsoft, so you can use Copilot. So we're going to ignore for a second whether Copilot's actually any good as an LLM or not. But I think everyone internally has had this experience where they take a document, they just call up Copilot and they like summarize this document. And this is it works, right? A document, here's my context. I can then ask questions and dive into it and get summaries for it. But how do you do this when there's hundreds of documents or thousands or hundreds of thousands of documents and you don't even know where the information you're looking for is? So there's not really anything in the market that allows you to identify and summarize key pieces of information really accurately. And the second thing that is really hard, particularly for we call it AI, but really everyone's talking about LLMs, right? Large language modules, is that they're really bad at aggregating numerical information. And so we have some proprietary processes that allow appropriate analytic and aggregation of numerical information across all these filings. And there's a lot of numbers in it. Um, that ability to summarize and aggregate numerical information is kind of key to doing effective competitive research and product design. There's a
Okay.
long-winded answer, Tony. Does that answer your question though?
Yeah. So it sounds like for this non-actuary and non-product
Yeah.
guy, former underwriter,
Yeah.
former sales manager more than underwriter, but I did underwrite for a while. So it sounds like AI for filings while keeping your the numbers not getting messed up like they tend to in LLMs.
Yeah, well, that's part of it. The other part is like uh being able to summarize the right information, being able to find the right information. So I'll give you an example, like, oh, draft me an objection to something. Well, sure, you can ask ChatGPT to do that, but like, where is it drawing its information from? How is it being trained to answer that question? I think a lot of companies that are coming out with these chatbot style windows really puts two key pieces of responsibility on the end user. The first one is that the end user now has to figure out what this LLM is actually good at versus what it's bad at. right? Rarely do these AI first companies come and say like, okay, you can chat with my LLM. They'll analyze all of your all your claim documents are going to be here and you can ask it questions and things. But, you know, it may or may not be good or bad at summarizing some of that information. So they're putting that onus on them. And then the second thing they're doing is they're really you're forcing the end user to become a prompt engineer, right? How do you structure and ask questions appropriately, which vary widely from use case to use case. And so, we eliminate that. We take on that responsibility and we design it directly into the tool so that you're not trying to engineer the right information into, a conversation, and you're not trying to design a really robust, reliable, and quality prompt that makes sure that it's not hallucinating, that the appropriate information is being brought in, that there's references back to source material. So we provide a lot of structure and expertise because we're insurance people that have made technology and not technologists breaking into the insurance industry. It's like walking the ITC floor. I was blown away by how many San Francisco based, successful founders there were that had no insurance background, and they couldn't answer even basic questions like, how long does it take before an insurance company knows if they sold a product profitably? Usually years, right? Like we estimate loss ratios for stuff we sold last year, but we don't really know. So I think there's just a depth of understanding you need to design effective products for the insurance market.
Okay. Um, what is the implementation like to get Insuraviews?
For us, flip a switch, Tony. We have no
So
integrations. We don't take any
fantastic.
proprietary data.
Mhm.
So the procurement and access process is super easy. We've had a lot of traction and we're deploying to a lot of companies. And so there's appetite for starting to ingest some of the data and information from individual companies. And there's definitely some operational integrations that we wanna be able to do. But right now we want to create this very low barrier to entry for companies to try out and access our product because the reception and stickiness of it has been so good. So I'll give you an example. Like we have a top five carrier that they onboarded 40 people, and then we just gave them a link and you said, no, anyone with your email address, your domain name, they can become members as well. And, within 2 months, the number of people went from 40 to almost 100. So there's this very like natural value that the product adds once people get their hands on it. And I mean, that's, 60 people that didn't go through onboarding, that literally could pick up the tool and learn how to use it. So it's very intuitive. It's very easy to adopt. And so, I'm a technologist at heart, even though I'm an actuary. And so I found that the most effective way you build really good technology is really good feedback loops with your customers. So for us, before we even had like a front end web app for our product designed, I spent, months, 5 times a week talking to potential end users. And now that we have people on our tool, we're, just obsessed with talking to them. How are you using it? What are the challenges? How can we make it better? And I think having really powerful customer feedback loops is a huge competitive advantage for designing intuitive and useful tools.
What's the pricing philosophy? Is it per user or
You can go out to our website and you can buy individual licenses, but generally we favor enterprise licensing. So an enterprise can buy, the package and then they'll get unlimited user access right now. Are you familiar with Creative Destruction Labs?
they're the accelerator out of Wisconsin, right? Not
Yeah,
insurance
yeah.
specific.
Yeah, well, they have a whole bunch of verticals. So they have
Yeah.
healthcare and so they have a risk one that's insurance specific. And so we just had a meeting there, and one of the things we're talking about is price optimization and pricing structure. We've had really good traction, which is really, nice. And so now we're trying to figure out how do we structure and price the product appropriately, which will probably be a 2026 activity.
All right. So did you guys launch just a year and a half ago?
Yeah, no, the product's
A little over a
ideation
year?
happened. Yeah, well, the idea of the product happened in February or March of 2025. And then in August, the founder came to me and basically was like, I have this idea. I've validated some of the basic infrastructure, that I think I could do it. Do you think you could help me talk to some actuaries? And so I kind of did some customer discovery for him, and I felt like the idea had potential. And so we spent, like I said, multiple times a week, every week for months doing customer discovery, coming up with how we were going to design and deploy the data and what data needed to be captured. And so by the time we actually launched and brought on a technology CEO, the market, we had a product that was very, I don't know if appetizing is the right word, but the market was like, yeah, actually, we've been waiting for something that was designed the way that you have, the way that this is designed. And so, um, over the last 6 months, the traction that we've had across the marketplace has been unbelievable. The reception's been wonderful. And so now we're really focusing on scaling and growing right now.
You built it lightning fast. That's fantastic.
I have a very good technical co-founder and a great technology-based CEO. So the leadership team that we have here has really great insurance background, technology background, and we've been very efficient with the resources we have to get things up and running. So yeah, no, I agree. Yeah, it was fast.
So how what's kind of the origin story? How did he realize that this was a need?
It's interesting. My co-founder had a cousin that reached out to him and was basically like, "Hey, I would like to learn some data science work." And so he, was like, "Okay, well, the job I have right now isn't challenging enough. So maybe I'll build a product, some sort of product. There's emerging technology and stuff. LLMs are becoming big right now. And so he's like, what's an area in the industry? And he started just calling all of his old friends and just asking them like, hey, what are pain points and things that are happening right now that you don't have solutions for? And, rate filings was this area where there's massive amounts of information, very hard to access. The tools out there were legacy, they can't update the infrastructure to leverage new technology. And so he kind of zeroed in and he just started toying with it. Hey, how do I get the data? How do I extract data? And so once he kind of had like, okay, well, I have some data and I figured out an extraction process, then he's like, I need to go talk to people. And that's when he contacted me. And so it's kind of this, just serendipitous, I doing something for fun. But like all great products, I think it has to come from customers first, right? Talking to the industry, being out there. And it's actually fun. I see you all the time at conferences. I'm on the road a lot now. I get to start documenting all these other pain points, just talking to people and been like, what sucks right now? And then you can find like, oh, maybe there's a gap, there's an opportunity for a product here. Or even if there is a product in the market, clearly it's not reaching all of the users that need it. And so this process of customer discovery to design the most useful and valuable products in the market it's a fun kind of iterative experience.
Right. What's on the development pipeline for next year that you're excited about?
Yeah, well, so one, right now we're property and casualty focused, so we're about to start adding life and health products. So that's one. Um, We're going to start pursuing more financial data as well. So within the rate filings, you see a lot of rating and pricing changes. But that's only like part of the story. The other part of the story is like the loss experience. So looking at Schedule Ps. So, okay, well, they're raising rates. Is this a result of poor loss experiences? Are they ahead of the curve? They're beating everyone. And then the other one is like market share. So how have people's market shares changed over time based on their historical behavior? And so integrating some of these additional data sources along with the rate filing data paints a much more vivid picture of what's going on in the marketplace. And you can do much better analysis, not just like, okay, well, people are taking rate. How much are they taking? What are the DOIs accepting? What rating variables are they pulling in? But then also looking at like, okay, well, this has been their historical behavior. How has that affected their market share? And if I, adopt this similar behavior, how is that going to affect mine? So, interesting case studies have been like, Geico was very much ahead of the curve on some of the rate indications on the personal auto side, and they were above. So they've been quieter over the last, 12 to 18 months. Um, and so they're hoping to recapture, I believe, some of that market share, where like Erie is the opposite. So through, 2022, 2023, 2024, Erie took almost no rate increases, captured a huge amount of market share in their target areas, and now they're playing catch up. So I think it's very interesting to be able to overlay the loss experience and market share data with the rating algorithms and rating behavior, to kind of color the picture of what's going on in the entire industry.
Yeah, that sounds kind of a dream set of tools for the pricing side.
I think even at the executive level, it helps understand how the decisions you're making drive the economic performance of the company. I think we as insurance professionals that have like domain expertise, like underwriting or claims, we very much view like our respective area as a primary driver, right? Like
Mm.
underwriters are like, if I can better identify mismatched exposure and things like this, or, if I can add one more variable in or one more piece of information, I can really weed out these people who are definitely going to claim, and all of a sudden my loss experience, and the claims are on the same side. Well, if I can adjust a little better, if I can negotiate better settlements, if I can limit our legal things, um, but a lot of it comes down to distribution and market share. I think that I don't want to say this broadly, that we undervalue distribution, but distribution is really a giant driver of overall performance. Who's bringing in your customers? What incentives do they have? And where do you stand in the larger marketplace from an economic perspective? And those are really hard questions for executives to answer, to really to be able to make facts and database decisions around what they should be focusing on, what they should be doing next. Does that make sense?
Yeah. Yep. All right. Well, one at the
Um,
very beginning, go
yeah.
ahead. Go ahead.
I was going to ask Tony, I'm curious kind of what your opinion is. You're on the road, you're at these conferences, you've kind of seen the emergence. You've been part of the technology game before this explosion, in the last 3 or 4 years. And I'm kind of curious what your opinion is on the current wave of technology and innovation. Um, you know, Technology is great, right? Insurance company needs, there's definitely ample opportunity for disruption, but what are some of the struggles and successes that you think companies need to traverse this landscape?
It, it's so hard. There's so many options, right? And everybody claims to be an AI company, basically. So who is actually an AI company? Who is little more than an API call to ChatGPT kind of thing? Um, and insurance companies historically are conservative in the way that they approach, right? So how do you decide within so many freaking options? One thing I really like is that at these companies that come on the podcast, I run into more and more uh, insurance people who identified a problem, then they went and found technologies to build a solution for it, uh, rather than I don't know, 8 years ago it was 100%. We have a cool tech toy. We're finding somewhere to apply it to insurance. So I think we've gotten better with that, and the fact that we now have some accelerators that are dedicated to the insurance space, right? GIA for
Hmm.
the carrier stuff, broker tech, and 101 Weston Labs for the agency and brokerage side, and plug and place. The insurtech side is now super mature. They've been like 15 years.
Hmm.
I do think that the space is maybe maturing,
Hmm.
hopefully.
Hmm.
Uh, Still definitely there's huge churn of insurtechs, but I mean there's startups. That's just the normal way of the world. Um, and I like that some of the recent acquisitions, or maybe not so recent, are not getting swallowed. Like 𝗏𝗏𝗀𝗃𝗀, right? Acquired by right in your backyard, by American Family.
Yeah.
Uh, they it remains independent, right? Continues to serve the independent market. They didn't just get like swallowed by the larger company and kind of disappear over time. I don't know. It seems that we continue to be a healthy and growing space.
Yeah, I wonder how it's evolving on the carrier side from an executive level perspective. One of the things I've noticed is that it seems that executives seem to be more receptive and pushing down the idea of people looking in the marketplace for solutions, where I don't know if that's always been true
It definitely wasn't.
historically.
No, no. Most carriers had a strong build it here mentality,
Yeah.
and I think that they've yes they've kind of come around to it's okay that we don't build it,
Hmm.
right? And even if some experiments, so some POCs with insurtechs didn't work out, that's fine. Eventually we'll find one that works. Let's not waste the money building it here.
Yeah.
I hear less. 5 6 years ago, a little bit before COVID, the number one complaint that insurtechs had is that we show them stuff, they're like, oh, that looks cool, but we want to try to build it ourselves.
Yeah.
And I think that happens less now.
Yeah, it's really interesting with, some of the insure tech services that have started up, and the emergence of like the MGA market. Like historically, especially if you roll back to like 10 years or earlier, the barriers to entry of actually delivering insurance products was so incredibly high.
Oh,
And now with like,
between MGAs and current technology, it's incredible. Like the MGA
yeah,
space has
like you could
just
spin up a whole
exploded.
insurance company in a year, and so one of the things that I find really interesting is that these kind of niche, smaller insurance companies, as they spin up, are looking for how do I take pieces of technology and to level the playing field. And so, I was having a discussion with a couple, insurance commissioners from departments of insurance. And, one of the value propositions our product has to the larger insurance market is that, we provide at your fingertip access to information that historically only large insurance carriers were able to access and analyze. Where with our tool, you can get high level market level data and then drill into super specific pieces of information relative to your carrier, at less than an FTE, and at speeds and information that would blow at historical competitive intelligence teams away. And so suddenly these small players now can access and understand how the most robust insurance companies and insurance products work. And they can use that information to update and adapt their pricing and product strategies much, much quicker. And so I think it'll actually drive a lot more emerging players, so new insurtech and MGAs, to increase the number of optionality for end consumers. And so I think it's actually a really good value proposition to support our product for departments of insurance because we're going to help lower this barrier to entry of getting more coverages available to the end consumer, which is ultimately better for them. It's better for everyone.
Yeah, that's fantastic for the insurance ecosystem overall.
Yeah.
Fantastic. Yeah, and anything that allows and enables the easy creation of great insurance
Hmm.
is a win. Those small competitors that have sprung up as MGAs, maybe converting to carriers later,
Hmm.
are very, very, very healthy for the overall system, and they force the larger carriers to actually innovate.
Yeah. Yeah. Yeah, so it's a very interesting landscape. I think everyone kind of says, well, insurance is the dinosaur, the laggard, the last to adopt. And part of the reason is that there was not a competitive and there wasn't as much competitive incentive. Like, I remember State Farm talking about Allstate in the 90s, like, the dog on the porch, we have to keep him off. And this idea that there's only like really one competitor at the time, and now, maybe you have Progressive and Geico that's right. But like they're never like, oh, this new spin, this new insurtech startup company is going to compete with our market share. But increasingly, I think that is what's going to happen. And the personal market's probably the most challenging, right? If we're going to be frank, the personal auto and personal home markets are such an efficiency at scale market where the commercial market's much more fractured and easier to kind of enter and find niches in. Um, Unless you're doing substandard, which is incredibly difficult from a pricing and product perspective to pursue on the insurance side. So, it's also interesting that the MGAs and some of these startups are just like, you know what? We'll take 150% loss ratio for the first 3 years. We're just going to grow real big and lose money, and that's fine. It kind of, I'm an actuary, right? So it blows my mind. That's like a strategy that companies use to grow a business.
Will they ever catch up, right? Will the lemonades of the world ever actually be profitable?
Well, I think Root's a great example of this, where they shed huge chunks of their business in the pursuit of profitability. Um, and so I wonder one of the things I wonder is, these companies, these lemonades, the Roots that like have this strategic or, brand advantage that they're taking advantage of. Like, oh, this is our differentiator. But is it really a differentiator in the long term if you're just like scaling up a book of business and then cutting huge chunks out? Do you really need a competitive advantage, or are you just taking advantage of like the psychological behavior of policyholders where some people are just like, I'm not going to switch, you know? So I think one of the things I've struggled with, at least, externally, certainly not an expert in this, but how many of these new emerging insurance carriers truly have differentiation, right? Like if you go look at Allstate's most recent homeowners, that product is unbelievable in terms of bringing in factors that no one's ever used before. And can you really compete as a startup company on some new piece of technology or some, is one strategic advantage enough to really compete in the larger market and, beat some of these big players? I think that's yet to be seen. I think we're yet to see an insurance company become disruptive to the point where it really moves market share. I don't think we've seen that yet in the insurance space.
Definitely,
Unless you want to
definitely
argue
not.
that that's what Progressive has done, but I don't know if
Well,
that's a
but that
reasonable
that's
argument.
way that yeah that's the. I mean, they're a very tech forward old carrier,
Yeah,
but not a new entrant in the last, let's say, 15 years.
yeah.
Yeah,
So
in personal lines, it's extremely hard.
yeah, it's almost impossible. So I don't know. I'm waiting. I'm optimistic. I think the niche markets will continue being kind of a battlefield, and there's a lot of opportunity there. But I'm waiting to see a carrier say, like, no, we are going to use an agile, modern, cloud-based technology platform that's going to give us a differentiated advantage that continues to climb on a market share basis. I think that's yet to be seen.
All right, all right. Yeah.
Just to follow this thought, also, especially when you have to shed huge chunks of your book of business to approach profitability, right? Like it almost seems like an impossible proposition.
I think
Or am I being
to
too harsh? Is a billion in revenue
no
like you've made it?
no no not as a carrier.
Yeah,
As a carrier, you have to have a real path to profitability,
yeah,
um, to be long term sustainable.
yeah. Interesting. It's interesting. What's next? 2026, Tony.
20, no
How
idea.
are things going to change next year? We're almost there. We're at the end of October. We got 2 months left. Let's just count the rest of 2025 out. It's over. What's happening next year?
No clue at all. What do you think?
Um, well, the law cycle's big. Everyone took a lot of rate. especially in the liability side. We saw some homeowners catch up. So far this year, cat losses have looked light relative to historic years. Um, Convective storm season in the Midwest wasn't as bad. The wildfires on the West Coast wasn't as bad. Canada got torched, but in the US, I don't think we got as bad. And then the hurricane season on the East Coast has been mild. So I suspect that a lot of carriers are going to come out of 2025 um, profitable relative to what they have in the previous decade. So I think propensity for, from an insurtech standpoint, propensity for adoption and budgets will be a little looser. And we've been in kind of a hard market the last 5 years, so we might start seeing things soften up a little bit. And then, a lot of this like automated AI, new technology, I think there is going to be a lot of efficiency gains from it. But you and I both know most technology um, integration and updates is a very time-consuming, expensive effort, like to move systems and things. So I think we will start seeing some of those efficiency gains, but probably not till nearing the end of 2026, um, where we'll start seeing expense ratios come down to maybe even like the 20% or the low 20s. But I'm waiting for that as well. So I think the loss ratios are going to come down. I expect the expense ratios are still kind of being buoyed by the transition to more modern technology. But once we start seeing some of the bigger players in the low 20s on the expense basis and see, across book of business profitability, I think that's when we'll start seeing some really interesting things happen. So I'm excited for 2026. I think it's going to be we're going to see the change in direction. The ship's going to move a little bit on the industry.
Fantastic. So 25 is finally looking like a good year for us.
Yeah, and we haven't had one of those in a while, have we?
Fantastic. Yeah, getting out of the hard market is I know every agent is going to be thrilled because they've had it hard for the last several years.
Yeah, and then we'll see how reactive reinsurance was. They're laggards too, right? And 2023, 2024, they started jacking up rates. They're like, no, this wasn't a blip in poor. We think this is going to be sustained poor performance. So I'm guessing that reinsurance rates are not coming down, even if we do have a good experience year in 2025. And, reinsurance markets drive a lot of the front end pricing because, that's basically a non-negotiable. So I think that'll also be a laggard where we're going to have to wait to see how sustained the favorable experiences and see if reinsurance rates start moving back down again.
Yeah, that'll probably take a couple of years further.
Yeah. Yep.
All
Yeah.
right. Thank you for your time today.
Yeah. What a gambit.
Interesting
ITC
conversation
insurtech to
today. Yes.
reinsurance rates in like 40 minutes. That was fun, Tony.
Love it. Thank you.
Yeah.